Greetings and welcome back to the channel. In today's video, we're going to cover the topic of exchange-traded funds, commonly called ETFs. Whether you are a seasoned investor or just getting started, this video will provide you with a solid foundation to comprehend what ETFs are and how they can be a valuable addition to your investment strategy. Also, if you are an advisory client of mine, your portfolio contains exchange-traded funds, so this video should be of interest to you. First things first, let's define what an exchange-traded fund, or ETF, is. An exchange-traded fund is a type of investment fund and exchange-traded product that combines the characteristics of a mutual fund and a stock. It allows you to invest in a diversified portfolio of assets like stocks, bonds, or commodities, all within a single investment. And, as the name implies, ETF shares are tradable on a stock exchange like individual stocks. ETFs come in various flavors. You can find equity ETFs which track stock indices and bond ETFs which follow bond indices. There are also commodity ETFs and even thematic ETFs that focus on specific sectors, themes, or strategies. One significant advantage of ETFs is their liquidity. They can be traded throughout the day just like individual stocks, making them more flexible than traditional mutual funds. This liquidity allows investors to buy or sell shares at market prices during trading hours. ETFs can offer a high degree of diversification within a single investment. By holding a basket of assets, they spread risk more effectively than investing in individual stocks. For instance, a broad market ETF can provide exposure to hundreds or even thousands of different stocks in a single purchase. Many investors appreciate the cost efficiency of ETFs. They typically have lower expense ratios than actively managed mutual funds because they aim to replicate the performance of an index rather than outperform it. ETFs are also known for their tax efficiency. Due to their unique structure, ETFs tend to generate fewer capital gains distributions compared to actively managed mutual funds. This can be a significant benefit when ETFs are held in a taxable investment account. While ETFs offer many advantages, they are not without risks. They can still be subject to market volatility, and their performance is tied to the underlying assets they track. It's essential to research and understand the specific ETF you're considering and how it aligns with your investment goals. In conclusion, exchange-traded funds are a type of pooled investment security that operates much like a mutual fund but trades on an exchange like a stock. ETFs can provide diversification, liquidity, tax efficiency, and low expenses for investors. They can be purchased as a single, standalone investment or combined with other ETFs to create a broadly diversified investment portfolio. Exchange-traded funds have become an integral part of my advisory practice and in the management of clients' accounts. If you would like to learn more about the investment strategy I utilize, then be sure to watch my video titled All About Asset Allocation. It's one of the more popular videos on my channel. If you enjoyed today's video, then be sure to hit the like button and subscribe to the channel. To learn more about my advisory practice or to communicate with me directly, please visit my website, maywealthstrategies.com. Until next time, I'm Andrew May, investment advisor and certified financial planner professional, and I look forward to sharing more real-world financial strategies with you in the next video.